obviously there's been bloodshed everywhere, but, when you look at the price action so far, what do you think is really driving this sell-off?
We haven't seen a day of carnage like this really since the COVID sell-off back in February, March 2020, just across so many different asset classes. And I guess if we think about the straw which broke the camel's back, we had the BOJ last week hiking rates. We obviously had some very weak data coming out of the US, the ISM manufacturing, and of course the non-farm payrolls. And you've gone from having a narrative around a soft landing to all of a sudden fears of a hard landing or a recession, coupled with potential geopolitical tensions in the Middle East rising, potentially leading to a more broader base conflict there. And as I said, what started as probably isolated moves in Japan in dollar yen, a little bit of profit taking in the Nasdaq after a wonderful move higher starting from probably mid-July, that pullback commenced. We're now seeing it spread more broadly across all different asset classes. I guess in terms of what can stop the bleeding, I do see tonight's ISM Services PMI as being crucial, because last month we saw that drop from 53.8 to 48.8. If we were to see another decline tonight, then you probably have confirmation in terms of what you're seeing in some of the other data there, that potentially the cool landing narrative has shifted to a harder landing. And when I'm looking at expectations out there for the ISM Services PMI, there is an expectation it does push back above 50. So potentially if we can see that rebound back above 50, potentially we've seen the worst of it in this session in Asia, but a lot is riding on tonight's data in the US. I cannot overemphasize that.
Powell still indicated that he was open to cutting rates in September. So do you think really that the Fed has missed the window here to execute a soft landing, or is it just a little bit overblown, perhaps, the market action?
Yeah, there's certainly concerns that he has fallen behind the curve there. I probably think now he can still get back ahead of the curve with a 50 basis point cut in September if the situation warrants it closer to that time. But at the moment, we have to be mindful that they have put a lot of emphasis on the labour market data. We have to be mindful that position was very much well skewed one way in a lot of markets. So we can still look back and say this has been a position flush. But again, it depends on the data which comes in over the next month or so, and that starts with tonight's ISM. We know that the ISM does reflect in terms of the services sector. It is partly to do with what's going on with the consumer, with what's going on with households, which makes up over 2/3 of US GDP. So I am just hoping we don't see that crack widen tonight, because if it does, any chance of the I guess the reaction we've seen starting to calm down pretty much all goes out of the window, and it does accelerate. And all of a sudden, a 50 basis point optional rate hike looks more like a necessity.